It's the Algorithm Gives Good Stock Advice podcast here on Wednesday, July 5th, uh, July 5th, 2023. So, a lot going on. I want to, do a podcast form, but it is going to kind of get technical because I'm explaining what the algorithm is doing and how to read it. I spent a good deal of today updating stocks, especially yesterday, updating stock options prices for a bunch of different companies because I did a video yesterday on July 4th about it. And what it did was it created something that said that a company is on top and there was a clear one to purchase. And I discussed it, and it was AstraZeneca. And AstraZeneca has already moved enough today to cover the cost of your option. Like, this is how cool this is. If you had purchased one right at the close on Monday, that early 1 p.m. close on Monday, you would have been able to buy this for about 163 bucks. I did buy AstraZeneca today, but I didn't do it at the open. And I obviously didn't do it on Monday. I spent 91 plus 71. I spent $162 on it. So I got right about that number, about how much it cost. Now, they moved enough today. They moved $1.98 today. So that means that at the strike price we were talking about buying at, which was a $65 strike price, that you already could sell one of these options for, we've got a $65 price. Their current share price is $67.23. So that's $223 of intrinsic option value. Paid $163, you could sell for $223. That's where you're getting this $60 of profit already on just one option. Just one option, that one being the call option. So 60 divided by 160, everybody, is pretty good. I'll do the math on that. It's not 50%, but it's greater than 25%. I mean, let's type over a number for a second. 60 divided by 163 is that number. Oh yeah, haha, that number's already there. That's right, you made 36%. I'm trying to explain what all these little columns mean. I know it's really difficult to read, and I'll try zooming in more to make it a little easier as we go one by one. But you kind of got to look at all of them because it tells you whether or not you should be buying something and how much you're going to be making. So that's right, in one day, the video I did on Monday, you purchase an option that expires July 14th, which is still eight market days away or something like that, 7 market days away. And you've already made 36% profit on your investment. At least, probably more, right? If you just sell one today, and I would say, yes, sell this. This is a great idea to sell your call right now if you bought one. The one I have isn't worth this because I got them at a price that's closer to 67. I have a $67 strike price option on them because I got it late. I got it a few hours into the day. I didn't wake up and grab AstraZeneca at 9:30 just for that purpose. And it probably wouldn't have been that price anyway because they'd already moved pre-market. So the reason why I did this video right now was I was like, all right, well, what you really need to know is you need to know what to buy at the end of the day because the algorithm's giving you the order of the biggest movers of the day. And that's what we're using as our point of inertia or velocity for a company, which means they'll probably have pre-market, post-market activity. And so you'll get some value when there's a drastic change in the open tomorrow in a company that moved a lot today, just like there was a lot of movement in AstraZeneca today because they had a lot of movement on Monday, the last time it closed. So do you buy these now at the end of the day? That's the question here. That's what's really interesting. We're sorting this by today's boom number. This is the best sort, but you have to do some analysis on the company that you're looking at because you may not want to buy it for other reasons. That just because they moved a ton today doesn't mean they're a great purchase. It matters how much do the options cost. That's one of the biggest, most important factors, really. Because the closer this number is to zero, the less risk you have. And I would argue that if you're paying less than even $100 for an option, that's only a dollar change in the stock price over a period of time, that you're not really even risking $100, because at some point you could sell one or both of those options for recovery value well within 50% or higher range a lot of the time when it's so cheap, as everything kind of blows up here as it tries to reprocess. We're going to refresh because it's grabbing current information. That's why I'm doing this video here close to 2 p.m. because I want to show you, first of all, what I bought today already, and then what I'm going to consider buying here as this stuff updates in real time. Super cool, right? I mean, it really is updating fast enough that you can make action, even though it's like 15 minutes behind. It's not really perfect, but it's still helpful. Yeah, a lot going on in this Google Sheet. I'm not giving out access to this yet, but I will. And I can also, if you just look at the formulas I made, you can create this yourself. This is all with Google Finance formulas that pull the actual stock price. You know, if you want to get a stock price, you put in a Google Finance formula, something like this. I'll show you what it does. There's a guide on Google. You just look up Google Finance formulas. Have ChatGPT code some Google Finance formulas for you. I had it do that for me when I was testing something out. But like, for example, today's price per share right here, that's Google Finance C2. That's the formula right there, meaning it's looking at the ticker and it's running a, giving you a price. It'll give you highs and lows. It'll give you all kinds of different things that you want. Now, we got some errors because it's fetching data and it's doing it for about 600 companies. We're going to shrink this list down because there's some companies that you would never, ever, ever want to invest in. But what I want to talk about is, all right, AstraZeneca is already a win from yesterday. Should you buy it now? Yes, you should buy it now. It's still moving more than 100% of its boom number, and you could buy an option which goes until July 14th. It's only the 5th, and you already won on the one that would have been purchased on Monday if you had this information and made that purchase. Already a winner at 38% plus whatever you'll be able to sell the other option for. So as of 2 p.m. on the first day you had the option, is this going to be profitable from now until the 14th? Algorithm says there's a high likelihood that this is going to be profitable. They were profitable last week as well. They were number 84 on my list last week. So it's not a ton of money. You don't you bought this thing for 160 bucks and sell it for 230 or whatever. You don't make a fortune, but when you think about, invest, you don't have to buy just one option here. You could buy 10 of them for 1,600 bucks, right? And you would have made 600 bucks, 630 bucks or whatever. So there are ways to do it, but the algorithm says yes on stuff like that. And I want to talk about some more of these columns because they're important. Where does AstraZeneca not have a good rating? Okay. It's got a good rating when it comes to how much it moved today in the boom number. It's got a good rating in how much the options made overall since we harnessed its potential bid and ask call and put prices. So it's making money. It doesn't cost a lot. That's why this number is green. Its total cost of 163 is green. The break-even boom number, that's a number determining how far the company stock has to move for you to reach a profitable zone to sell one of your options for more than the cost of both. This number being a low number or closer to zero is close to zero as possible is the best you can have. Look at how low the break-even boom for AstraZeneca is. They only need to move 2.5-ish% for you to make money still. They already moved $2 today, right? Yeah. And there's a way you can also, if you're expecting them to go up or down, you can try to buy it at a strike price that is either higher or lower than where it is currently. You can still make an estimate on what direction you think you're going to go. As long as you buy the option with the same strike price, you're fine. Now the option prices are going to vary at different, like the amount of the call and the put are going to vary. But that's an interesting idea. I haven't thought about doing that. I just kind of buy it on the number that it's at. But you don't have to do that. You can still make a play on which direction you think you're going to go. But it's probably going to still work out about the same oftentimes because of the way that you have a call and a put. So it'll just get to your direction quicker if it goes in the direction you want to quicker. So if you think that AstraZeneca is going to continue to go up, you would try to get a strike price that's, say, at like take more premium in the strike price that is already there, meaning you buy the $65 a share strike price now, you'd be willing to pay the couple $100 premium to have the lower number, and the put that you buy is going to be much cheaper because they're $2.26 above 65, so you hardly have to pay anything for your put option. So like here are the estimates of the calls and the puts. They're showing up over here. They're between 57 and 69 is what the put is. Well, if you buy a $65 a share strike price, then this will be down at like 20 bucks or something. It'll be much, much lower. So anyway, so there's different ways to play it, but this is giving you the orders of the companies to straddle. But like I said, you got to talk about all of them, and are they all buyable? Well, AstraZeneca, I say, is now, yes, continue to be buyable. However, it would have been nicer if you got it on Monday. So I'll say, yes, you can still buy it. Now, what about the other ones? SPX. So SPX, I started to look up all these companies before this video because I pruned this list to try to get a top 10 to see if the top 10 was buyable. So SPX, I decided not to buy. And the reason why was that they have to move almost 5% in break-even boom number. Their share price is only 79. They're 375 bucks. I didn't think they were necessarily going to be a super huge mover, but algorithm says yes, so don't listen to me. I'm just trying to give you anything that's bad. The break-even boom number is a lot higher than 2.42, but a 5% break-even boom can be beat. Is this too expensive at 375 bucks? Kind of. For what it is, meaning like they're only an $80 share company. 375 bucks is a lot to pay for a company that doesn't have over $100 share price, right? So that's kind of one of the reasons not to go with them. But algorithm says buy them. I decided to pass. I thought there'd be better deals. Las Vegas Sands. I did not buy that either. However, it is buyable. The only problem is their share price is low at $56, so they can't move that much. So I decided not to do that one either. It wasn't a super great deal. As you can see, it's not as cheap as AstraZeneca, but their break-even boom number is higher at 3.86, makes it a little bit tougher. Their lower share price by 12 bucks, 11 bucks. So they can't move that much. So even though they're on this list and says they'll be profitable, I decided to pass on that one too. Now we get into some interesting stuff, which is Generac. So some things I noticed about Generac's record here that caught me intrigued a bit is, look at this, which is, I ranked them last week. Somehow Generac was #1 last week. #1, meaning whenever I grabbed the information from the week of June 30th, they moved the most and profited the most in intrinsic gain for some reason last week. So already I'm like, well, that's a really interesting number. So that's good, right? That's a sign that you probably should buy them. Well, what happened today? I mean, they moved 112% of what they needed to move. What did they do? They're this one. Like, let's learn about what they did. They have a break-even boom number of 6.26%, and they cost 880 bucks. That I don't like. So why would I pay 880 bucks for this? Well, they're a $140 share company, so at least their strike price is up in the 140s. That's good. That's a reasonable share price for a company. Today they dropped by almost $10. So what probably happened with them is they probably went up a ton last week, and now people are taking profits, right? They moved just enough today, but this is too expensive. So this is one of those where there's a possibility they'll do it. They've been moving, but they're just too expensive, and the break-even boom number is bad at 6.26. So everybody knows that they're supposed to be active. So while they'll probably be somewhat active, you're overpaying for this, so it's not the right time. The right time to get Generac was right when you found out they were number one last week, where maybe the options would have been a little bit less, and you already would have hit it. Now are you going to hit it again? They're not a $300 share company. They're a $140 share company. So it's kind of like it's too risky. The total cost is too risky. Next, but it's, I mean, algorithm says yes, but I think it's too risky because of the cost, right? Zillow. I bought Zillow today. That's one I bought, and I'll explain why I bought that. First of all, I saw that they were 48th last week, like in that. So they had some movement last week. Good. What else? I saw they're cheap at $243. They got to move $2.43 a share. Why is it so cheap? Well, their break-even boom number is about 5%. So that's higher than you'd like. So why do I think it's still okay? Share price is low at 49. So that's not great either. That's why it's so cheap. Well, I'm erring on the side of it being very low risk because it's only $243. But I looked at their financials and I looked at what's going on, and they're not making as much money. The home market is starting to have a lot of interesting questions about what's going on. And they don't have like an earnings per share number. I don't think they're making money. They'll probably continue to go down, actually. But the fact that they've had this inertia from last week, they're cheap. They've moved almost as much as they needed to move in just one day. And what else? The spread range was really low at 5%. I mean, you have a really good idea. It's a highly traded stock for options. And when the spread range is below 5%, that's excellent. It means you get a pretty good idea of what it's worth. So I bought those. And we'll keep an eye on them, right? Just like I got Astra Zeneca, I also got Zillow today because I saw that. So you can tell I'm looking for good movement, low cost, because these are the low risk. You really should be cost risk, because that's what it is. Like your options always have some value because the price is at a certain number at any given time. So you have some intrinsic value built into one of your options if you bought a call and a put at the same strike price. So the lower this number is, the lower your risk. And even though there's not a lot of potential reward, you're trying to make like 10, 25% or something in a week, which is actually a lot of money. And it's doable. So that's the one I went with. What else? I looked up Wolf Speed, and they need to move a ton. They need to move 11% or something. Like they're having some berserko run. They moved 13% today. They cost $700. Like this seems like a total gamble. This is not a good one for, like, you might hit strike gold with this. This is one of those where like you go after a big runner, something that moved immensely. When it comes to companies that moved the most today, percentage wise, which is something we could look at, I'll do in a second. Wolfspeed's definitely one of those, moving 13% today, right? They're up $7.49 to $64. So the share price also isn't that high, but whatever. I didn't really look into why they're moving, but it's just too much too soon. And yeah, so stayed away from that, but it is showing up on there. Let's resort this, by the way, because it keeps changing. Companies keep moving in price. Let's see if there's anything we haven't talked about. Air products and chemicals. I didn't talk about that one. That one costs $1,000. That's why. So this is a more expensive one at a higher share price. This air products and chemicals common stock, but they did move a lot today. Their boom is not that bad at 3.64. They're just expensive at $1,000. Zillow, Kalak, I have not reviewed. When did not. Meta Facebook is moving $1,100 for Zuckerberg's options. They do move, but that's too expensive. But you'll see some action out of them because they're $290 a share. PPG, that is the other one that I bought or tried to buy. Actually, I tried to buy. I don't think any of my PPGs have gone through yet, actually. So I have orders out, and I'm gonna have to double check on that. But I tried to buy this, and maybe I won't talk about it because it hasn't gone through. They had a good week last week. They were 140 share price. It was reasonably inexpensive at 345, and the break-even boom number is really low. But I don't think they're traded all that much. And yeah, my orders have not gone through. I'm actually going to cancel my orders because I had those orders out for over an hour or two, and they were reasonably close. So that company is probably not traded all that much. So I'm going to cancel that order, but I did try to get that. And as you can see, it lowered down on the list too. So anyway, I just wanted to do this video to explain, like, yeah, if you do one thing in preparation for the week, AstraZeneca is still up there because it's so cheap. But Generac is still interesting, but it's too expensive. Las Vegas Sands probably gets there. I mean, but you really want something with a better share price, right? So like when you look at people that have moved the most, for example, you're going to get both sides of this. The one that went up the most is that Wolfspeed. So there's some argument to be made for potentially trying the Wolfspeed options, but they're $700 and it's only a $64 share company. It's just not what you want to do. So I'm happy with the recommending, the AstraZeneca, Zillow being cheap. And you can start to look at other companies that are also winning and losing on the week, which I'll get to more as I look more by market cap and really start to prune this list. But like Block, like are any of these super cheap? There's AstraZeneca again. I keep telling you to buy AstraZeneca because once in a while something pops up that's so distorted that it wins every day in a row for a couple days, because you're like, how are these options not that expensive? That's because AstraZeneca is usually not a huge mover. Something weird is happening. They had a drug that I think they put a lot of money, lung cancer drug that has not shown promise or something. And so there's just this change in sentiment, I guess, about the future about them that caused that activity. And while that will eventually dissipate, the options are still $163. And they keep moving more than that every day the last 2 days, right? So that's why when that stuff pops out, that's what the algorithm really points out. And you have to do just a lot of research within here. But I will release this to subscribers or something when I figure out exactly the perfect order for this. Because right now we're just sorting by things like boom. And I have to do all that other analysis to tell you whether or not SPX or Generac or Wolfspeed are risky or not risky picks. And you have to look at all the different columns, like the break-even boom. And yeah, like you have to see really what you're paying for. And you want it to be green all around is what you want. You want to have no reds, right? If you don't have any reds and everything's green, then the algorithm is confirming on every single factor, right? Like you don't see all greens under SPX. You see reds under the price per share, the change, which that's actually not a bad red. Because moving a lot is good. Spread range is bad. Strike price, not great. Meaning it's not like it's like this stuff's bad, but this stuff's good. And so you want to find confirmation with a lot of stuff. And so I pointed out AstraZeneca because you've got a lot of green here. The only thing that was bad is that it's not a huge share price company and the spread range could be a little bit better. But the value of everything and the break, like all this stuff is really good here. And, you can look at other areas to try to find that, like this Toll Brothers. Look at Toll Brothers, although that's a 7-7. So I have to update this. This is only the option that expires this Friday on the 7th, not the 14th. So I actually need to update these numbers because that's deceiving. And I'm slowly adjusting all the ones that were 7-7s to 7-14 so that we get a more accurate depiction of how much they actually need to move and their true cost. But all the ones we talked about, I had reviewed and had options that are the 14th or later. Anyway, so good times. It's recommending AstraZeneca again, and it's recommending Zillow, and that's what I bought, and we'll track them every day. We'll do this. I'm probably going to buy another AstraZeneca just to show you that you can do it before close. And I'm thinking about this SPX because I'm arguing with myself. I'm like, why am I glossing over SPX? Why am I doing that? Let's ask, I want information. Like, is this company gonna continue to move? I mean, this is what the algorithm says, take stuff like this. I don't know. I don't know. I'll do some research and I'll talk about it tomorrow, but the algorithm is saying doing this is not that expensive. So I'm just shying away from it because I don't know why, but I'll look into it more later. All right, good luck, everyone. Mail your trades be winning.